Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark believes the U.S. dollar still has room to climb. Hilliard MacBeth from the MacBeth Group examines the impact the NDP Alberta election win will have on business. Zeal LLC CEO Adam Hamilton warned stock market margin debt is at a record high. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money.
Nice to be with you, Jim.
The Canadian dollar, the U.S. dollar. What's happening with the currencies?
Been a little bit of a choppy week. We've been having a lot of pressure on the U.S. dollar for the previous 2 weeks. Bottomed out a little bit this week, starting to stabilize. Now down a good 4.5% to 5.5% from the highs of the year. Still looking for another couple of percentage points here. The dollar index, ideally, looking to give back about 40% of the rally from last spring, so that would put it around 92.5 on the index. And on the reciprocal side of that, the Canadian dollar, still looking towards this as a bear market rally in here right now. But 85.5 would be a reasonable upside target based upon what we see for the U.S. dollar index.
The Americans would love to have a dollar valued at what the Canadian dollar is, simply because I saw their profit reports and they blamed the high U.S. dollar for poor profits.
Oh, yeah. I mean, that's the natural aspect of what's happening here. And, the other side of the coin, we've got these Canadian companies with U.S. revenue that have been coming up with great numbers. I think you want to be a little cautious about that right now, though, because the year-over-year numbers are looking great. But if we take a look at the price action of these stocks, they pretty much topped out in January, February as the current Canadian dollar bottom. And I think you're going to be looking for maybe still some softer levels on these Canadian issues as far as the ones that had that strong U.S. revenue flow. I would look at that, though, as a significant buying opportunity because I don't think we've seen by any means the top of this U.S. dollar run. We look at the long-term cycles, they tend to have far more than just 1 year runs off the bottom. And so I think a pause in here for the U.S. dollar for maybe another month or so, build a bit of a base and get the next leg to the upside. So that's definitely going to have some pressure on Canada. The other thing that would fit into this, is the commodities, and there is a very direct correlation, inverse correlation with the oil price. So what I work with are some overbought and oversold indices looking at the dollar index on a weekly basis, and any time that we get an oversold on the dollar, that has become an interim high for crude oil. And at the rate that we've been coming off here the last couple of weeks for the dollar, another 2 to 3 weeks of sliding to the downside would probably put a cap in for the oil market. And we pretty much got that nice double bottom there in oil between January and the middle of March. Nice breakout. But I think looking down the road here this summer, we're coming past the seasonal high. I think you want to be looking pretty carefully at the $54 level for oil. We're sitting around 59.5 right now. It could still press against the highs for a little bit, but I think the pullback you want to be looking at is to see how well it finds support at 54.
And people are also pointing out that the storage facilities for this excess of crude are quickly filling up, and that could affect the price.
Oh, yeah. There's, the inventory story. Actually, that started back in January. There were a lot that were anticipating that inventory problems would become a March-April issue, and that has dragged out to the point now where we are coming into the middle of May, and the story is getting a little long in the tooth. I wonder, what has not been anticipated within the analysis. I think price-wise, if we start to violate the $54 level, as I mentioned, that will probably imply that the inventory situation is starting to take a hold, and then who knows where the support level will be.
The bond market has become interesting again.
Yes, we had the big slide in bonds, the jump in yield. Initially, it started in North America a number of weeks ago, and then in the last week, we've seen German bond rates go from 10 beeps up to about 60 or 70. So the European rates have started to rise. We talked about the perpetual reset preferreds as an item that people might want to take a look at to participate in a rise in interest rates, because I think that we've probably seen the secular 30-year bull market move in bonds come to an end, and we're going to be looking for just an erosion process in bond prices and an increase in yields, maybe another quarter to half a point from where we are right now before the year is over.
Greece has been offering a very high return on their bonds, and what backs them up even is that they were able to make their last debt payment, something over $200 million.
Right. They've got another big one coming up next week, and from what I read, they're doing everything they could possibly put together in the background here to renegotiate the rates. We'll see what happens. The Greek market, equity market's been doing pretty well off the bottom. I'm looking here at the GREK, which is the ETF for Greece. Last 2 weeks, this has gone from just under 10 to just shy of 13. A 30% move. Not bad.
Ross, thanks a lot for chatting with us.
Look forward to seeing you next week.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. If you have any questions for Ross, his email is ross.clark@cibc.ca. Coming up next on This Week in Money, Hilliard MacBeth.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Hilliard MacBeth from the MacBeth Group in Edmonton, Alberta. He's also the author of When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to This Week in Money.
Nice to be here.
Are people still in shock in Edmonton about the results of the election where the NDP swept out the PCs who'd been in power for 44 years?
I think generally people are in shock, and maybe not so much in Edmonton where there's a history of voting NDP, but the shock is the rest of Alberta, Calgary, even some of those smaller cities like Lethbridge, Grand Prairie, Red Deer, unbelievable, Red Deer, the heartland of conservative Alberta. It is shocking.
Of course, I don't know why the people should be shocked. They were the ones who cast the ballots.
Yes, and they, I think I've heard, so now it's a couple of days later, and I've heard many people say, well, but that's not what we wanted. We wanted a minority government. We wanted to shake things up, but we didn't really sign up for this. And so that seems to be one of those things where people are getting a bit of buyer's remorse, perhaps.
And are you seeing that kind of feedback where companies say, well, that's it. If we're going to have an NDP government, we're packing up and heading to either Saskatchewan or BC.
Yeah, take the oil out of the ground and pack it up in your suitcase. And I don't think that's going to happen. But of course, overlaid the NDP victory is of course overlaid with what was happening before that, and what was happening before that was very substantially negative for the Alberta economy. There's an awful lot of undercurrents going on because of the slowdown in spending in the oil patch, and whether the PCs had gotten reelected or the NDP victory as it happened, it wouldn't really change that. There's a huge change coming in smaller companies that supply the oil and gas service and they don't announce in the paper layoffs. They just quietly disappear, and that's what we're going through. I was just shocked. Last couple of weeks, there was a Ritchie Brothers auction, April 28th, and I drove by it several times on the way to the airport to pick up people or to go myself, and I couldn't believe the amount of equipment in that field. It just went on for acres and acres, and it looked like it went on for a full mile. And apparently they sold most of it, although there was so much of it there. I'm sure it must have nobody in Alberta would have been buying it. It must have gone out of Alberta, or even out of the country, perhaps.
Well, I saw that Finning bought up Finning bought up a Caterpillar dealership in Saskatchewan for over $200 million. So somebody might be optimistic out there.
I think there's a lot of optimism in Alberta, and so that the reality is that people are quietly cutting back, and lots of stories of people being asked to take pay cuts. But if you look at the stock market and the public announcements and the takeovers, there's still a lot of optimism, and I think there's a general feeling that we've been through this before. I hear that all the time. And the oil price will recover by the end of the year. I hear that all the time. So some people are saying, this is a buying opportunity, and they're taking advantage of that.
What kind of concerns do people have about the new Premier, Rachel Notley?
Well, the thing about NDP in Alberta was it was always considered a union kind of thing. And unions in Alberta, as you probably know, are a very small percentage of the workforce, smaller percentage than BC or Ontario. So it was the Canadian, the Alberta Union of Public Employees and other smaller unions that were involved. And then sort of a reputation of being different and being always in the opposition. And nobody really thought of them as ever forming the government. So I don't even know if people really examined their policies that closely during the election. I think the one thing that helped them quite a bit was the leader, Rachel Notley. She comes across as reasonable and intelligent and well-spoken and all of those things. So she didn't scare people away. And but did people really look at their policies? I don't know. But really, the policies, I did take a look at them, and they're not that controversial. The corporate income tax would go up, but the PCs had already said that's what was going to happen. So that's not really a change from the PCs. The personal income tax rate would go up for the higher income people, but the PCs had already said that was going to happen as well. So those two things are the same as the outgoing government was already going to do. And then the third one, and maybe this is the biggest one, is the royalty review. So the leader of the NDP, had mentioned that there would be a commission formed that would review the royalties, along the basis that Albertans, as the owner of the resource, are not getting their fair share. And I think there's a general feeling in Alberta that there's some problem there, that there isn't enough money flowing to the owner of the resource or the government's on behalf of the owner. But nobody really knows the truth. But even that one, so that's the biggest, most controversial one, I would say. Even that one, actually Ed Stelmach, when he was premier, that was 2 or 3 premiers ago, he instituted exactly that same thing. So even that one isn't that radical. So really, the PC party had moved to the middle of the road. Wasn't the right-wing party that people thought it was, and so I don't think it's as big a change as some people think.
What about her stand that she won't be promoting the XL pipeline and she's against the Northern Gateway pipeline?
Yeah, the Keystone. That is a different. So that one, a lot of people have kind of resigned themselves that the Keystone pipeline won't be approved until after Obama's gone, and that seems pretty clear. And he doesn't leave. His successor doesn't take over. The election's not till November of 16, and then he doesn't actually give up the reins until January of 17. So it's almost 2 years away. So that stance doesn't seem to really change anything, because there was no chance. One of the previous premiers, Redford, she went, it seemed like 24 times to Washington to lobby on behalf of the pipeline, but it didn't seem to have any impact at all. So, and her stance on the pipeline that goes through British Columbia is also not that controversial, in that most people are aware that it's not going to be approved anyway because of the opposition from the environmental and the Aboriginal people. So, I really don't know. The one thing though in Calgary probably would be that they might feel like they don't have an advocate at the government level, and so that what she does with her cabinet might be very interesting, because she needs to find somebody. And I have no idea. I don't really know any of the people, and that's one of the things that is quite interesting about this. I don't know anybody that knows any of the people that won on Tuesday night. So we don't know who she's going to appoint, and that'll be a big factor, as she can sort of build some bridges with the Calgary energy industry.
Well, I saw on a TV talk show there's already controversy about people in her government. Some 24-year-old woman on Facebook, she's giving the finger to the Canadian flag, which I'm sure doesn't. That doesn't sell well to any side of the political banner in Canada. We're pretty proud of our country.
I remember, what was that in Ottawa? There was a 20-year-old woman that was elected accidentally. I guess she just put her name up, and it turned out she was a bartender or something, and she was vacationing in Mexico when she won the election, and she was the most surprised person that she'd been elected. I just talked to a client yesterday in a meeting, and they said they wanted to get rid of the PCs, but they couldn't bring themselves to vote for the NDP in their riding because the candidate was a 20-year-old student who was still at university. So they voted for the Liberal candidate, even though it was pretty clear the Liberal candidate had no chance to win. So that is definitely one of the... So from a policy point of view, from a leadership point of view, it doesn't look like it's going to be that difficult a transition. But from the elected representatives in the legislature, there's 53 of them or 54 of them, something like that. That's going to be very, very interesting and perhaps very challenging too, because there's usually about 20 people in a cabinet, so she'll have to fill those spots.
And plus, she might be quite moderate in her point of view, but some of these other people may not be.
Yeah, that's the problem that the Wild Rose. So one of the most interesting things about this is everybody would have predicted it would have gone Wild Rose if you asked them a year or two ago, if you told them the PCs were going to eventually self-destruct and somebody else was taking over. And then the Wild Rose got into this incredible internal fight, which involved some very radical components of the Wild Rose, and the leader crossed the floor and went to the PCs, and 9 other people did the same, and it was mostly because of the factions and the rifts within the Wild Rose Party, as I understand it. So the NDP, I think they're probably more likely to be able to work together. I don't know them that well, but they've all been sort of along the same path for a long time, and but there will be some promises that the people are expecting sort of a left-wing kind of an agenda, and the leader will have to make some kind of effort to appease those people in some way, and she'll have to pick something that they can rally around as a change. But I was thinking back. I've been watching this since Lougheed got elected in 1971, I guess it was, and the policies that Lougheed and his group back in the 70s were espousing were very left-wing in today's terms. I mean, like government taking over oil companies like the Alberta Energy Company, and government doing all kinds of diversification initiatives like starting up a cell phone company and a magnesium plant and a forest products company. I mean, those would be considered even too left-wing for the current NDP today. So it's quite interesting how things shift around.
Well, it's the debate in the terms of, is she going to be a Roy Romano, who was very business friendly when he was Premier of Saskatchewan, or is it going to be Bob Rae's Eat the Rich that they saw in Ontario? Yeah,
Alberta's so it really is a cyclical economy in Alberta, and it really is dependent on at the moment, I think 2 things, the energy industry and the construction industry. And the 2 are kind of related, but there's a vast construction industry in Alberta as well. And unfortunately, both of them appear to be heading into a downturn at the same time. So I suspect that the questions of ideology will be overtaken by just the necessity of trying to figure out how to get through this difficult patch that we're headed into.
As someone commented to me, when you're the mayor of a one industry town, you can't change the direction of the place.
No, and I think that's the biggest thing. She'll go to Calgary and she'll meet with those people, and they'll tell her the facts of life as they see them, and they're used to getting their way. I mean, that'll be the biggest thing. And there's a group of people in Calgary that, control the spending of billions and billions of dollars, and they'll either meet with her and come to some kind of agreement on how to get through the next couple of years, or they'll meet with her and have a big blow up and a big eruption. But in the whether it was the PCs got reelected or whether the NDP got in, there was going to be and there will be substantial cuts in spending in that industry in the next year or two, even if the oil price rebounds up to $60, $70 a barrel, it's not going to change that fact. And that's going to have major impact on people in Edmonton and Calgary and Fort McMurray and Red Deer and all these places. It wouldn't have mattered. It wouldn't have mattered who got elected on Tuesday night.
Any sign that head offices in Calgary might be headed back to Vancouver or move to Regina?
Well, one of the things that just amazes me, because I recently published a book on the Canadian real estate industry and the bubble that's going to burst. But I didn't look at office space as part of that book. I was looking at residential real estate. But the excess office space in Calgary is just absolutely mind-boggling. And there's a whole bunch of buildings under construction right now, as there is in Edmonton as well. So this is going to be one of the biggest and most interesting things in the next couple of years, is the decline in price of office space, the lease rates per square foot, and whether Calgary and Edmonton both are very dynamic cities, and they're going to go through a difficult time the next couple of years. But if you had a company with a head office in Toronto, there were previous times when TransCanada Pipeline, Canadian Pacific Railway, and a couple others that I can't think of right now, they just up and moved their whole head office to Calgary, and it was one of the best things they could have ever done. In the next couple of years, there's going to be some great opportunities for major moves like that of large companies. And if they were thinking straight, I think they would take advantage of it, because office space rentals in Toronto are still in the $40-$50 range, and I'm sure there'll be deals coming up in Calgary that are just like $10 or something, even less. Maybe just pay us the cost for heating and air conditioning, and we'll give you the space. That's what it's going to be like. And so what a great opportunity. And it's also got some benefits in terms of moving to a more dynamic part of the country. If people believe that Alberta, the West is going to be the more dynamic part of the country in the next 10 or 20 years.
What about residential real estate? I heard that Calgary home sales were down 22% last month.
It's just the start of it, right? So it's really quite interesting. A friend of mine pointed this out to me. So I did this, and if you go on the internet and look in one of those services, the one I used was Realtor.ca, and you punch in any number. I picked 850,000 just for a number, and you look up the number of homes for sale in Calgary in the area, and you can limit it by how far out you want to go. But I got 1,100 homes in that, and the last time I did it a few days ago. And in Edmonton, it's a smaller number, but there's still a very large number in the hundreds of. I think it was 400 or 500 or something like that. But Calgary was 1,100. But what's even more interesting is if you go in, and it's always fun to go from highest to lowest, because then you see the $5 million homes and the really expensive places. And then if you click on the individual listings and you look, what you find out is these are homes that have just recently been built, and they're obviously not occupied. You can look in the pictures, and they've got staging, which you know what that means, right? Like you hire a company to come in and put some furniture in there that looks nice and make it all look nice, but they've never been lived in. And some of them have build dates of like 2013, 2014, even 2012. So these are homes that have been built on spec, presumably by some builder, and they're asking for $1.5 million, $2 million, $2.5 million, $3 million for these homes, and they look really nice. Like there's no question those are beautiful homes. They're also really close to downtown Calgary. Like they're only you could almost walk to work in one of the big office towers in downtown Calgary if you wanted to. And I don't know how they're going to sell them. Like there obviously are people that could buy those houses. There's a lot of wealth in Calgary, but everybody in that position right now is worried and scared about the future. So they're going to be holding back. And plus, the other thing that's really bad about it is anybody buying a $2.5 million home or can afford it has already owns something, right? They already own a home. Maybe it's worth $1.5 million or whatever it's worth, and so you have to sell that to buy the other one. And it reminds me of the 80s when I went. I was very aware of that, and the activity just dries up. So the actual prices that you see recorded are not very accurate because they only record what price people are asking for in the listing. But if there's no activity, you can't say that that's the real price. The real price could be very different from the price that's in the listing. because what happens is the sellers and the buyers just can't reach any kind of agreement, and the number of sales just trickles down to close to zero. I wouldn't be surprised out of those 1,100 listings if only a couple of dozen have actually changed hands in the last few months, that doesn't give you a true view of what the market is. Like in the stock market, the shares of IBM, there's millions of shares trading every day. You can accurately say your 100 shares of IBM is worth X dollars on that particular day. And but in the housing market, who's to say? Until you put it up for sale, until you get a buyer, you can't say if the $1.5 billion you're asking is the right price, or whether it's $1 million or maybe even 500,000. Who knows? If all of those people, all those 1,100 people, decided they absolutely had to sell by the end of the month, by the end of May, who knows what the price would be? There might be no price that could satisfy that amount of supply coming on the market. And one of the big things that we haven't talked about is debt. And I wasn't totally surprised, but I was a little bit shocked to realize how much more debt in Alberta compared to the other provinces. So you got expensive housing in Vancouver and you got expensive housing in Toronto, but most of those people, especially in Vancouver, they've owned those houses for a long time, and they may not even have any mortgage at all on some of those homes, or they come in from outside of Canada with cash to pay for the homes. But in Calgary and Edmonton, it's primarily a function of young couples, 30 years old, whatever, borrowing hundreds and hundreds of thousands of dollars to get into the housing market. They both got good jobs. They might be combined making $150,000 a year or even more, $200,000 a year, and they're borrowing. So I've been told directly by people that they were offered $1 million of mortgage debt to buy a house in Edmonton, just a few months ago. So the debt levels, when I researched it, are about double the national average based on per capita. So if Alberta has 11% of the population, it's taking on 23% of the new debt through the CMHC insurance program in Canada. These are amazing numbers, considering it's a cyclical boom-bust economy.
Thank you very much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth from the MacBeth Group in Edmonton, Alberta. He's the author of When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website is themacbethgroup.com. Coming up next on This Week in Money, Adam Hamilton.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Adam Hamilton, CEO of Zeal LLC. Welcome to This Week in Money, Adam.
Thank you so much for having me, Jim. It's great to be here.
I was just wondering if the election of the Conservatives in Britain has had any influence on the markets here, considering how tied up money is around the globe.
It's a great question. It was a landslide victory from what I hear. I haven't followed it much, but the big thing this past week has been the jobs report in the United States. There's been a huge focus on that in the States, of course, as always. It's one of the biggest pieces of economic data in the world as far as its impact on markets. And it came out Friday morning, and it was just crazy. It was The jobs number came in below expectations, essentially in line, slightly below, and the stock market just took off worldwide. The DAX in Germany, the CAC 40 in France, the FTSE in London just started screaming higher as SPX futures did in the United States. They were up about 1% after the report, and so that just overruled everything of the entire week to that point. People are so fixated in that the valuations in the U.S. stock markets are so high. Janet Yellen alluded to that earlier this week as well. I'm talking about. I think her direct quote was valuations are quite high. We do valuation work at Zeal. We take all 500 companies of the S&P 500. We look at their individual trailing 12-month price-to-earnings ratios, and we do this once a month at the end of the month. Our latest number from the end of April was 26.0 times earnings, just a simple average of these elite companies. 28 times is historical bubble territory. So everybody knows the stocks are crazy overvalued, but everyone wants them to go higher just because there's such a vested interest in this industry to get people to be invested in stocks and stay in stocks. That way the professional money managers can get their take from their percent of assets cut of assets under management. And so people love this jobs report because it wasn't a disaster, but it was in line, it was weak, and they also had past month revisions, negative revisions as well. There were 39,000 less jobs in the prior month than we thought initially, and that was a terrible report to start with. And so, yeah, really interesting, but that jobs report and the focus on that kind of overshadowed everything else, including the elections in Britain this week.
Although people are saying in Europe, the reason the markets in Europe went up was the British election. So, or maybe it's a combination. It's hard to tell which influenced what.
Yeah, I watch the futures in real time all the time, and the markets in Europe were definitely up before that jobs report, but they just shot up after that. Huge spike in the charts within, seconds of that 8:30 a.m. New York time release of that report. So, I just watch markets in real time, and it really looked like they moved hard in that jobs report, as did U.S. futures. But, the elections could be a factor too. One thing about pundits, including myself, is we all want to ascribe market moves to something. We all have this deep need as humans to say the markets move because of X, because of Y. And, so sometimes the attribution's correct, sometimes it's not, but, the definite big movement this week was after that jobs report.
So could you maybe give us a rundown, say what you expect we're going to see in the S&P over the next week or so?
Yeah, we just finished first quarter earnings season, Jim, in the United States here, and the earnings were all right. They weren't great. There's this ridiculous game they play in the stock markets here where all you have to do is beat expectations. And if you run a corporation, you just tell the analysts, hey, your expectations are too high. Your expectations are too high. So they lower them. They lower them. They lower them. Then you beat this expectations number, but it's kind of false because I think that earnings should be compared on a year-over-year basis. Like, okay, what was your first quarter 2015 versus your first quarter 2014? Is your company growing? Are your profits growing? More importantly, are your sales growing? Is your business growing? And revenues were down for the most part in the United States. In the S&P 500 companies, earnings were flattish. So with that earnings season over, there's not really many buying catalysts. Every day on CNBC, the American Business Channel, we'd hear, so-and-so beat, so-and-so beat, so-and-so beat. And that kind of encouraged the bulls to buy high. But without earnings season, we lose a huge buying catalyst. The jobs report was a buying catalyst as well that we discussed. And without that, I think the markets are going to drift lower. There's really not much going on. Valuations are high. We've got rate hikes coming sooner or later. And all that's really ominous for the stock market. So my best guess is a slow drift lower over the summer. I don't expect a sharp decline or certainly not a crash or anything like that, but these markets are really high. The sellers are going to outweigh the buyers here, I think, without positive catalysts, and we're through that for a few months anyway.
Are people still hoping to make quick profits?
Oh my gosh, it's crazy. One of the best measures of the zeal, the fervor of speculation is margin debt. And on the New York Stock Exchange, margin debt is at a record high. And it's really interesting. If you look at a margin debt chart versus the stock market cycles, the last time it peaked was around the 2000 secular bull top and then the 2007 cyclical bull top. And this latest peak is wildly higher than those earlier two peaks. And so people are looking to make a quick profit. They're borrowing money to buy stocks. I've been trading my entire life, and I have never, ever debt financed a stock purchase. It just seems way too risky for me. It's also happening in China. There's also record margin debt in China. The Chinese stock markets, their primary stock index is the Shanghai Composite. And that thing has almost doubled in 6 months here because the Chinese people are borrowing money to buy stocks, and that's a really major sign of a stock market topping. When you're so crazy bullish on stocks that you'll borrow money to buy them, knowing that you're going to double your losses if they go down on you, I think that's people are getting a little bit crazy on the greed side there.
I was going to say, too, in China, they don't have the low interest rates that we have. They have a real credit crunch, and people are willing to pay incredibly high interest rates as well.
Yeah, that's a great point. Another interesting thing about the Chinese, I think it's a bubble. I think it's a stock mania. Another interesting thing about it is Bloomberg did a study of in America, when you open a brokerage account, you have to tell your broker your level of experience in the markets, also your level of education. The idea is that the broker wants to make sure you can handle the kind of account you're opening. So if you open a margin account, you got to say, I have a college education, I have a graduate education. And this data from China this year is just crazy. Like something like 2/3 of the new Chinese investors had a junior high education or less. So we're talking, 7th, 8th grade education. Like a third of them were like grade school or less. And I think like 7% were considered illiterate. That was the word in quotes in the Bloomberg report, i.e. they had no formal schooling at all. And these people are opening margin accounts to borrow money after they put all their cash into the red-hot Chinese stock markets that have doubled in a half year. Sounds like an accident waiting to happen to me, Jim.
Wow, Barnum and Bailey, when they say a sucker born every minute.
I'm in, brother.
And when their stock market does correct, how many lives are going to be ruined?
Oh, it's going to be terrible. The Chinese people, a lot of them are getting more affluent in the cities, but there's not a lot of wealth there. The per capita incomes are still low compared to the world. And, I knew some people back in the early 2000s who played the tech bubble with margin, and they lost all their financial assets. They lost equity in their house. They lost pretty much everything they'd bet in the stock markets once the tech bubble in the United States crashed. So I think it's going to be a big problem. And the Chinese government's actually very scared of this, Jim, because they're worried about social unrest. Their big thing is, hey, let's keep the people calm, not rioting. We've got 200 million people here. We've got to keep them calm. We've got to keep them happy. And so when this stock market bubble pops and ordinary people, lose their entire savings, equity, whatever they borrowed, there really could be social unrest there. So the government's really trying to step gingerly and they're trying to moderate the stock market, just the verticality of it. But I've never seen an example in history where a stock market's gone vertical, doubled in 6 months, and then it's just been able to plateau there, just start moving nicely from that point. If it goes up vertically in a parabola, it comes down symmetrically after that. And so I don't think the Chinese government can stop it, even though they're desperately trying to. But it's going to be a big deal socially in China when that happens. It's going to be ugly.
We're speaking to Adam Hamilton, CEO of Zeal LLC. Adam, what's your outlook on crude oil right now?
Crude oil is really interesting. Obviously just collapsed between the summer 2014 and early 2015, from 105-ish to, 45-ish, just an insane drop. Apparently, a 50% plus fall in oil has only happened like 6 times since the early 1980s, and 100% of those 6 times, within 6 months afterwards, oil had bounced by 50%, and that's pretty much happened now. We've gone from the low 40s back up to, low 60s, and so we've almost seen that 50% bounce. I think oil, the fear was really overdone in it back early this year, and I want to be bullish on oil just from an exclusively oil basis. I think it's priced too low for world production costs. But on the other hand, U.S. supplies are just overflowing. The storage here is just almost full, like down in Cushing, Oklahoma, the giant tank farms. Another fear I have, Jim, is that we've done historical studies that find that crude oil is highly correlated with the S&P 500, which I expect to sell off to roll over into a new cyclical bear here. I think that's because futures traders see stock markets sell off globally, and they think, okay, stock markets are selling off, therefore the world economy must be slowing. That usually is true to some extent, but so my main fear with oil is that if we get a stock market sell-off, even a gradual decline in stock markets, oil is going to get sucked into that selling. It has such a high correlation with stock markets for whether it's righteous or not.
Precious metals.
Oh, precious metals. I thought we weren't going to use 4-letter words here. I've been a gold investor for decades, man, and it's been so frustrating this year, and especially the past month. April, for instance, gold's at 1,200 most of the month, but slightly grinding lower. It has a big move on the first day of April. I'm like, sweet. There's people institutional investors buying in for the new quarter, didn't want to show gold in their books and at the end of Q1 when they have to report to their customers because gold is such a hated asset class. So they're buying in at the beginning of Q2. That's great. Then the rest of April, gold just went sideways to lower, and the volatility was exceptionally low for gold. It drifted from 1210 down to 1180 or so, which is where it is, this week, and it's so frustrating. You see central banks, we have the biggest concerted money printing in the history of the world between the Fed, the Bank of Japan, the European Central Bank, People's Bank of China, just incredible monetary inflation, yet investors aren't excited about gold. It's so deeply out of favor because the stock markets do nothing but rise, therefore everybody wants to buy stocks. And people are also concerned about the interest rate hikes that are coming in the States. The Fed's going to have to hike interest rates sooner or later. They've been at 0 since December 2008 in the dark heart of that stock panic, which was a once-in-a-century event. And everybody thinks that, okay, gold yields nothing. Gold doesn't pay interest like bonds do. Therefore, as interest rates rise, gold will fall out of favor. But, the history of that doesn't prove that out at all. Historically, gold has done very well in high-rate environments. There was that 1970 Super Bowl, Jim. That's the stuff of legend. Gold went up something like 24 times that decade. And the federal funds rate in the United States, it started out at 3.5% in the early 70s and was hiked up to, I think, 14.0% by January 1980 when gold peaked. And yet gold still just skyrocketed. The faster the Fed hiked the federal funds rate, the faster gold climbed. And that's so contrary to the popular understanding on gold today. And I think the reason is because when central banks hike interest rates, it really hammers bonds. As rates rise, bonds drop because existing bonds have to be sold off so that their fixed yields equal the new interest rate. And as bonds fall and stocks fall, when interest rates rise, stock valuations have to drop because bonds become relatively more attractive than stocks because their yields are higher. People look for alternative assets, and that's when gold thrives. Gold can only do well when conventional stocks and bonds are struggling. That's when people seek prudent portfolio diversification. That's when they seek assets that move contrary to the stock markets, and there's very few of those. Gold's the principal one. And so I'm really bullish on gold, really hopeful for gold here. But man, people just hate it right now, just loathe it. It's so frustrating to watch.
Is anything happening on the bond market?
There's been a huge sell-off in European bonds. Over in Germany, don't quote me on these exact numbers, but I think the 10-year German Bund might have been a few weeks ago. It fell as low as 5 basis points. Like a 10-year you're getting paid 0.0005% to loan the German government money for 10 years. And that's going to be a big problem for the European Central Bank. As you know, it started a new quantitative easing program back in March. It was announced in January. But the ECB said that it wouldn't buy bonds if they fell below its minus 0.2% deposit rate. And so they're only 25 basis points away from that at that point. But since that time, a couple weeks, especially this week, the German bonds, the bonds around the world have been sold so hard. I think the DAX, the 10-year yield on the Bund was up to like 70 basis points this week, and the Treasury yields really spiked too. U.S. 10-year Treasury, call it from 2 to 2.25 within like 6-7 trading days, and so there was a big sell-off in bonds. And I don't think investors fully appreciate the huge risks they have in bonds. We're in a zero-rate world essentially right now, or super low rate, and when those rates rise, existing bonds are going to be sold off. They're going to be sold hard, and I think there's a huge risk there. I definitely think there's a bond bubble, and when that sucker starts popping, holy cow, watch out below. People are going to get so scared. It could get pretty crazy.
Most people feel bonds are a lot safer than stocks.
Yeah, that's generally a righteous perception. Bonds are generally safer than stocks. If you can hold a bond to maturity, and whoever you're lending money to is good for paying it back, you have no risk essentially. But people don't own bonds directly; they own bond funds for the most part, and these institutional money managers trade bonds often. And if you don't hold bonds to maturity and interest rates rise, you take a huge hit. These money managers, they're awesome; they're the best in the world. They think that they know how to trade around this thing, and I'm sure some of them can. But I've studied this, and I don't know how I would trade around it if I ran a bond portfolio. I don't know how it's even possible with the hedges they have to put on and stuff. And I think that the risks are just very, very high there for bond funds and people not holding to maturity, which is probably 99% of bond investment.
The U.S. dollar has been king for the past couple of years, rising in value. What's it going to do?
That's really interesting. The U.S. dollar went parabolic here over the past, for the past half year before March or so. It was up like, say, 26% over 10 months, and that was its second biggest and fastest rally in history. We're talking U.S. dollar index terms, which is the dollar versus a basket of 6 different currencies. The only time the dollar ever rallied faster, and this is over a history since like 1973 or something, was during the stock panic in 2008. So it was the second most extreme dollar rally in history of this index, which is 40 plus years old. And when anything goes parabolic, be it the dollar, Chinese stocks, whatever, it tends to collapse symmetrically. And we've seen that this past month. In April, the U.S. dollar index started sliding, and late April, it sliced below its 50-day moving average, which is a big sign of technical weakness. And it's fallen from 100 at the peak back in March and April down to, call it 95 to this week. And I think that drop is going to keep going, Jim. A lot of people say the dollar is going to be bought as the Fed starts raising interest rates, but the rate hikes will probably be slow, and earning 0.25% or 0.5% in treasuries isn't really a big deal, and I don't think that's going to entice world investors if the bond principal's fallen because of the rate hikes. So I think the dollar's going lower. Before this parabola, the U.S. dollar index was about 82, and now it's once again about 95 or so. So we have a long way to go before this parabola is erased.
Adam, is there a website people can go to learn more about your newsletter?
There sure is, Jim. It's called ZealLLC.com. We publish a couple newsletters, and right now we're running a 33% off sale called our Contrarian Extinction Sale. So come on by. We'd love to have you.
Thanks for chatting with us. My guest has been Adam Hamilton, CEO of Zeal LLC. That wraps up the show for this week. I'd like to thank our guests, Ross Clark, Hilliard MacBeth, and Adam Hamilton. And thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.